Good morning and welcome everyone to the Money Control live stream. You are watching Markets with Santo and CJ. By the way, I am Chiranjeevi, but you can call me CJ. So guys, I believe that the pace of India's equity market is changing very rapidly, led by a new wave of retail investors who are not only daring, but intelligent too. And I will be bringing all that daring and all that intelligence on this show to bring you the ultimate status check on Dalal Street.
Well, hi, I'm Santosh Nair, and I do agree with CJ when he says that there's a new wave of retail investors who's taking the market by storm. And yes, they are daring, I mean, no doubt about that. But, well, intelligent, I think I have some doubts on that. You know, CJ, what happens is when the markets are rising for too long, like, there's a saying about the bull market that, it's a phase of the market where actually a lot of people start mistaking good fortune for intelligence. So I think something similar could be the case with this new investors also who have seen only a rising market so far.
Whether it is luck or intelligence, what matters in this market, Santo, is the bottom line. And nobody has quite made the money that retail investors have in this market. So I cannot take your slight dig on retail investors' intelligence.
Well, we'll see to that soon.
Yeah, of course, we'll keep debating about this every day, guys, at 9 a.m. and 3 p.m. on this live stream. But now that your digs are taken care of, do you have something for us on the show or not?
Well, yes, I thought you would never ask. You simply seem to be going on. Well, on this show today, we will take a look at the key factors that are driving the market. What are the things you need to watch out for? We will also look at some stock takes from me and CJ. What's happening in Infosys, Blue Star, and India Bulls Real Estate. We'll talk about whether bank stocks can hold ground in a falling market. And lastly, in Andar ki Khabar, we'll look at what's cooking in Reddington.
What's cooking in Reddington?
Yes.
Wow, interesting. That should be one to watch out for. Well, it's expiry day. We are now because of course tomorrow is a trading holiday. So the expiry of the options weekly will happen today, and it seems traders are heading into a very lukewarm session on Dalal Street, Santo. It seems if you look at the cues that are emerging from the the Nifty futures of that are traded on the Singapore exchange, it looks like we might have a mildly positive start on Dalal Street, which is quite good given the 2 days of losses that we have seen. That said, US markets were ended lower. They had started on a strong note, but they ended up giving up all of their gains and ended in the red. Asian markets have gotten off to a mixed start following the cues from US, but yesterday we had seen a sharp day before yesterday actually we had seen a sharp decline in oil prices, but once again yesterday we saw 6 to 7% surge in Brent and WTI crude oil futures. So that is something
I can see from your white shirt, CJ, yesterday it was all yellow, bright and sunny, and today it's white. So is it some kind of a waving white flag calling for truce, finally accepting that,
I am not downing my tools or calling for a truce. Look at the cues. I mean, we are going to start off on a positive note. So it seems that the bulls are resisting the urge or resisting the push that bears have been giving to them for the past 2 days.
Well, so we still have about 6.5 hours of trading to go. So
we'll see. But there was some cause for mild optimism when you look at the data that came out in the US on the inflation front. Remember, everybody was watching out for that data. It was probably the most looked out for data yesterday. Of course, overall annualized basis, inflation came out at a decadal high, but there was actually the March CPI inflation, if you look at it on a month-on-month basis, it came below expectations. And the month-on-month growth also in the US core CPI actually slowed down. And now that has got some people thinking that maybe we have seen the peak in US inflation.
That's one way of looking at it, CJ, but I'll also draw your attention to what Bank of America Merrill strategist Michael Hartnett wrote in his recent note. It says that what you saw in Jan and Feb is not the main course, they're just appetizers. Okay. So the real correction has not really begun. You're talking about something peaking, there's another way to look at that.
Now, since you are dropping names, I'll also drop name. The bond king, Jeffrey Gundlach, said in an interview to CNBC that it is possible that inflation has peaked in US. At the same time, ING Economics, a very well-renowned think tank on the economics front, has also suggested that we may have seen the peak of inflation in the US, of course, but the decline could be a little long drawn. It may not be instant. But what does this mean when we talk about peak inflation in the US? Why do we care about it? We care because if inflation has peaked out and if it is going to go down, the trajectory is going to go lower, then it may, make the Fed rethink about all this aggressive talk about rate hike and reducing his balance sheet size, which has got the markets in turmoil over the past 2-3 months.
Well, that's the whole hope, CJ. I mean, the equity investors still are not convinced that the Fed can actually go ahead and hike rates, which it may do. So far, the trend has been that every time, there's some weakness in the market, the Fed quickly steps in and starts cutting rates.
Yeah, sorry for interrupting. Just one point that I wanted to mention, of course, you have made this point that equity markets have probably not priced it in. But bond markets were pricing it in. We saw the sort of, the mayhem that was happening in the US Treasury markets. But yesterday, actually, it was the US Treasury markets that reacted positively to the inflation numbers. I mean, the US 10-year yield declined about 7 basis points.
It is called short covering. Okay.
Oh, acha. Okay.
So, we'll look at what investors back home are thinking. So, the mood is a bit subdued ahead of the long weekend. So, it's natural that traders wouldn't want to carry forward too many positions given the overall nervous mood in global markets. Besides, we had some slightly weak inflation and IIP numbers, so those are also weighing
a very unappetizing inflation number yesterday.
Exactly.
Wow.
So that clearly is a dampener. But more importantly, FII selling seems to have resumed. Some heavy numbers there. Provisional numbers show that about 3,000 odd crore worth of shares were sold.
Yeah.
Now, CJ, if I remember, you were dancing up and down a few days back, saying that FIs have started resumed buying, and also it doesn't seem to be the case.
No, actually there is a difference here, and I mean, we need to look at the FIS selling number in a deeper way. So if you look at the emerging markets funds globally, they have been getting money like anything the past 2-3 weeks. In fact, the sentiment towards emerging markets have actually turned positive among a lot of your passive funds and stuff, a lot of the active managers in the US.
CJ, but see, the thing is, my neighbor getting rich doesn't make me happy really, right? So when money starts coming into India, I'll celebrate.
Yeah, but it seems like a lot of passive money is coming. People who buy ETFs, and therefore, given India's weight in all these global emerging market ETFs, India will also get those inflows. But it is the active investors, those active offshore funds who, dedicatedly invest in India. It seems they still are not convinced by the India story, probably because of the valuation.
And for good reasons. Okay, and then the focus will continue to remain on Q4 earnings. A lot of stock-specific movement expected there, and besides, we could still see mid and small cap stocks outperforming the larger caps.
But market update is done. What do we have on stocks?
So the main focus will be in the IT sector will be on Infosys. The company will announce its fourth quarter numbers later in the day.
Right.
About 2%.
What sort of growth are we looking at?
2% sequential growth in revenues is what most analysts are talking about. It could be slightly here or there, but there are no expectations that the company may surprise in a big way, because the IT sector in general is going through its set of challenges, which is mainly trying to hold on to talent. That's a big problem, plus the possible slowdown in the EU because of the ongoing conflict.
But they're still, projecting a lot of good deals. I mean, look at what TCS said.
Yeah, you can win deals, but you need to execute them also. CJ, don't forget about that. There are a lot of calls written in Infosys at 1800. So heavy call writing means that the people.
Yesterday, he still seemed quite buoyant about the IT space. Although he agreed that, of course, in the near term, there are headwinds on margins, as you talked about, companies have had to pay out of their nose to literally retain talent. But if you look at the 2 to 3 year demand picture in terms of deal wins and, the overall demand for IT space, he's still very bullish on that space.
And
so, yeah, we'll
next
see how that turns out.
on my radar is Blue Star. With summer approaching, we're right in the midst of summer, and demand for AC is likely to go up. The CEO of Blue Star was on CNBC TV 18 yesterday, and he said that demand has been quite strong across the country for ACs, and not surprising really. But the fact also is that his company is facing margin pressures, and while it has taken some price hikes, there's been some bit of margin erosion as well. Third stock is JSPL. This has been an outperformer in the steel space. a lot of analysts bullish on the stock. Strong earnings also expected. It's risen close to about almost 40 odd % over the last 3 months. Good earnings expected, and while the input prices for steel companies in general has been coming off, so that is expected to be an added bonus for companies like JSPL.
But do you fear that probably market has already gotten too excited about JSPL, Jindal Steel, and priced in all of the good news at one go?
Yes, it depends. I was just looking at the chart of JSPL today. If you bought into the stock, let's say 3 years back, you are sitting on a lot of money. 3 or 5 years back, the stock has gone up by about 8 times. But let's say you've been holding it since 2012. There's nothing much to cheer about. So,
Absolutely.
So with steel stocks, it's all about timing when you get in, and
it is all about timing in the market, isn't
Yes.
it? It's not time in the market.
Oh
that
yeah,
is
you
always
got
correct.
me there. Petronet LNG is the next stock. Again, some pressure on earnings expected because of the rise in gas prices. That is hurting volume offtake, and most analysts are negative on Petronet LNG. They don't see the they see the both operating margins as well as revenues to be under pressure during the fourth quarter. Then we have Spandana Spurti, where there is an ongoing row between the founder Padmaja Reddy and Kedara Capital, which is the principal investor in the company. But there are now reports that probably they could be arriving at some kind of an agreement. In fact, CNBC TV18 has reported, quoting sources, that they have agreed on some settlement of some dues. With this dispute settled, probably it could even clear the way for the preferential allotment to Kedara Capital, something which it has been stuck. So huge volumes in the stock, and it's also seen a good run up over the last couple of weeks.
Well, settlement or not, Santo, जहाँ मैनेजमेंट ही लड़ रहा है वहाँ हम जाके क्या करेंगे भाई, जितना दूर रहे उतना ही अच्छा है.
Well, that's where you get the opportunities also.
You make it opportunities. Yeah, on my plate. So I am going to head back to the IPO mart today again. We have a new listing that is going to happen. Hariom Pipe. Stock is expected to list on NSE and BSE today at 10 a.m. And if you look at the grey market premiums, it's looking like quite a good debut. I mean, grey market premium suggests about a 10% premium on the listing.
10% is not very huge, CJ.
I mean, in this sort of market, this sort of market, 10% is quite good, Santo. I mean, we'll take what we get. That said, of course, a lot of the analysts, when they came out with their IPO note, were quite positive, and most of them recommended subscribing to the issue. So that'll be one stock to watch out for. Anand Rathi Wealth. Okay, so this is a play, of course, on the financialization theme. We have seen what the equity market and the capital market has done in the past 2 years, and that is also reflecting on the company's earnings. A robust, blockbuster earnings from the company in the Q4. Net profit rose more than 300%, or 4x on a year-on-year basis in Q4. Sales were up around 50%. Asset under management was up about 23% on a year-on-year basis. So it's looking quite good for Anand Rathi Wealth, I must say. Next up is Indiabulls Real Estate. The company has closed its qualified institutional placement issue that it had come out with last week. It is basically going to issue about 8.6 crore shares at about 101.1 rupee per share, which is also a discount to the floor price that it had set earlier. The interesting bit is, and this is what really got my attention, FPIs have subscribed to more than 24% of the shares that were on offer to investors.
What about the other 76%?
They went to largely mutual funds and then HNIs. Of course, the company in its disclosures has only mentioned entities which have got more than 5% of the shares that were on offer. So we don't know the name of all the entities that have subscribed to the shares, but some of the names like Morgan Stanley, Nippon India Life, Copthall, a lot of these good big pedigree names were on the investor list. So
don't get swayed by big names is all I would say.
Yeah, well, but big names are smart money also, and you should always follow smart money. ONGC next up. The stock could do quite well today, given that oil prices saw a 6% jump. It's about down 13% from a 52-week high. So that is one stock that I'll look out for. And lastly, JK Enterprise. The company has issued warrants to its promoter to raise 38 crores. So I think the market has opened, so it looks like a good start, huh?
Yes, the Nifty has opened in the positive, close to about 69 points higher.
Yeah.
It's at 17,602. This is on expected lines, considering that we were seeing a firm trend in SGX Nifty as well. But on the whole, it's still, it is early days, I would say. We still have
And look at Santo, look at the mid cap and small cap space. Right? They are doing pretty well, actually, much better than the large cap names. So that is something that we had talked about earlier. That in a range bound market where Nifty is not expected to move too much, probably we could see some outperformance from broad-based stocks.
Have you heard of the term called sell on rally market? Probably this is something like that. Okay, so we move on to sectors, and today we'll be looking at the banking sector. There's been a clear outperformer of late, and yesterday it made a strong comeback. In fact, it was quoting in the positive despite the overall sentiment.
What a turnaround in the end.
Dramatic,
I mean, while the market
turnaround
was down, and
so the big drivers there are the fact that for the fourth quarter, most companies have reported a strong growth, credit growth, and that has perked up sentiment for the sector in general. With the economy also looking up a little bit, banks will be able to recover some part of their bad loans. So this is a big positive. Mutual funds have been quite positive on banking stocks. They have been regular buyers in the stock. And lastly, in the initial phases of rising interest rates, banks tend to benefit. So that's something that's driving interest in banks.
I take your point. I take your point, Sandra, that maybe the profitability metrics and asset quality is looking good for banks. But let's remember, they have still not been outperforming by that much. I mean, yeah, the past 3 months have been okay for them, not as good as, say, IT was in 2021. But if you look at what is the major drag on this sector, and that is FPI selling. I mean, they have been constantly offloading banking shares. The past 6 months, they have been net sellers on the counter. When you come to credit growth now, see, of course, on a sequential basis in Q4 update, we saw that credit growth was improving, largely led by retail loans and home loans, which were also doing well even prior to the pandemic. But banks were supposed to be a story about a revival in corporate loan growth. And there, we have still not seen evidence that should suggest that investors should be as optimistic as a lot of the people in the market are suggesting.
Private sector is still not investing in a big way.
Absolutely, so and why should it? Why should it? Capacity utilizations are still about 69% when, if you compare it to 10-year average about 73%. This economy has a demand slack. It has a demand issue. In a demand issue economy, corporates will not invest. That too in a macro environment that is so uncertain right now.
Don't worry. There'll be plenty of this new generation youngsters all beating a path to the bank to take out loans.
Well, youngsters or not, it's the corporates that the market is really looking out for. And once we start seeing corporate loan growth picking up, probably then banking stocks could be in for a re-rating, but not right now. That said, Andar ki khabar mein kya aaj?
So, Reddington is seeing some interesting moves over the last 3-4 days. Chatter in the market is that there was a financial institution which is looking to offload a big block of Reddington shares, and the market was expecting that probably the shares would be offloaded at a discount. But that did not seem to happen. Finally, the financial institution is said to have sold the shares through the screen itself. Yesterday, Reddington saw some huge volumes, close to a little over close to 1.7 lakh odd shares. Crore shares were traded on the
in fact, all the WhatsApp groups were also buzzing about Reddington yesterday, and nobody had a clue what was happening. So I guess this was
so 50% of that was. And the stock is already up about 3% today. So with a big overhang gone, I think that they are seeing some kind of action in Reddington. Escorts is the other stock now. Big Bull Rakesh Jhunjhunwala has trimmed his exposure to the stock. It's given good returns, and so it's not surprising that the Big Bull chose to trim some of his exposure to the stock. He's cut it down by about 3.57%.
But as Santo says, you should not go by big names, what they are doing. You should always do your own due diligence.
Also, the futures were trading at a huge discount for a considerable period of time, and it was very surprising. Usually futures trade at a slight premium to spot, but in this case, they were consistently trading at a discount, and people were wondering, how long will this trend sustain? And now it seems that a lot of HNIs who had recently bought the stock, mostly to tender it in the open offer, they have also started dumping the shares, which is because of which the stock has been consistently falling. It's down by about 18% over
yeah,
the last
yeah.
1 week.
You remember last week, I think we were having this chat and I was telling you that the Escorts futures were at one point of time trading at a 12% discount to their spot prices, which is humongous for a stock
But
like
a good
that.
bounce back today in Escorts. It's up
so.
about 8%. Whether this will sustain is what remains to be seen.
I mean, it's just 0.5%, so it's about 0.5%, so it doesn't look that great.
Correction, it is 0.5% up. It's up about 8 rupees, not 8%.
Yeah. So that said, we have done the wrap today. Market is looking quite good. I mean, thank God. So yeah, no downing of tools, my man. No downing of tools. We are back in this game again.
So please give your feedback on this show.
Yeah, and please stay tuned to moneycontrol.com and Moneycontrol app for all the updates. And you can always post your feedback on the links that you can see below. And also do follow us on social media and on YouTube. Thank you so much for joining in. We'll see you again at 3 p.m. sharp for a rundown of the day's action. Have a good day. Yeah.